The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. At the break, at the half-hour break, we're going to have Dale Pinkert from Forex Analytics is going to share some charts that he's been looking at. And he's been around for a long time. I knew him way back in the old days of the floor, 35 years ago. So he'll be an interesting guest to have on. We'll start out the show like we usually do with our DAX. As you can see, we completed that ABCD pattern yesterday. We've now backed off a little bit. This market, of course, has not exploded to the upside like we have in our indices. They don't have any tax bills going on over there. So that's probably, the reason. So the next one we want to take a look at, of course, here is the FTSE. And, they're in the midst of trying to get this Brexit thing done, whether they can or not. I'm sure they will. It's just a matter of time. And they go through the same political stuff that we do here. Probably not as extreme, of course, but they do go through it. The one thing I wanted to mention this morning is I wanted to thank you folks, especially two of you folks here that listen to TFNN for your generous contribution that we were able to buy several hundred pair of socks for the folks down at the Gospel Rescue Mission, plus the dinner for quite a few folks, and it's been very, very helpful. Let's move on to the next chart that we need to look at, folks. There's something very important happening in one particular, well, there's several there, but this is one that I really, since we're involved with this, and that is we want to watch this gold market very, very carefully. Let's just take a quick look at it here this morning. We were looking at it in the middle of the night, and we'll get this up here to see it. This is a shorter term chart. It's just a 15-minute chart, but it gives the last 10 days. You can see the 3-drive pattern that we had there at the bottom when we made the 78% level on the long-term weekly at 1239. Since that time, we've rallied $31, folks. We're very, very close to the $34 harmonic number in gold, and it's taken 10 days to get there. Which you would like to see it get there a little bit faster. But the other thing that's important is if we look at the time when we made the 382 retracement, down at the 1255 level, we were up $17 from that level. So we're very close to a potential sell-off in gold. Now, here's the $64 question. If you're really bullish, what do you do here? Do you just get out and then you just buy it if it gets back above 1275 again? And this is a quandary. And believe me, all traders go through this. One of the greatest traders that I ever met was Amos Hofstadter, and Amos had the patience of Job. I mean, he literally could set through really, really deep corrections looking for something a lot bigger. And he just viewed that as just part of doing business, and he hardly ever scalped out of it. But if you remember back in the 70s and 60s and 70s, we didn't have the data that we had now. Our commodity data came either through the Reuters or you had a bunker rainbow board, one of those flashing red and green light things. But nowadays, or ticker tape, and if nowadays, we have instant access on your telephones or probably on your car radio. I don't know, but it's got all this stuff that you're able to get in and out of a whole lot easier. And remember, back in those days in the 60s and 70s, it cost $50 to $70 to trade. I mean, that was your buy sell was $70. Now we're doing it for $3 and $4, sometimes even less. So that's the main thing to look at. Yes, Mike, we are looking at this. Excuse me, Mr. P. We're looking at this crude oil very, very closely up here at this $58. That's right at the 78% level. So watch it very, very closely. That's within $1 of the old high, which was 59. The thing is that you want to take a look at is to watch that heating oil, because this is the seasonal time for heating oil that has been going higher, and that's been pushing it up. But your risk here is very, very small, and you have two things going for you. One, you don't have any really wide-ranging bars, moving to the upside. It's really gone, relatively quietly, the last few days. I mean, we've looked at it several times, and it's still held up, pretty nicely. So your risk on this trade is a little bit diminished because you don't have those wide-ranging bars, to look at, and that's where the real key lies. If we'll just take a quick look at it right now, you'll be able to see that we've been waiting for this for quite some time. Actually, it's at the 786 because we did hit the 61% retracement yesterday and then sold off to about 56.90, but now we're right up here at that 58.05 level. It's taken 4 days to get there, from the 14th to the 20th. Let's try that again. That's 4 trading days, by the way. So that's pretty normal. That's what happened the last time. We went from December 7th into the 12th, 5 days. The 14th into the 19th is 5 days. So you've got a lot of things saying that there should be some pretty strong resistance up here at this 58 level in the crude oil. So that's an important thing to really watch. That's a good eye, Mr. P. I think you've got that one lined up pretty good. Now, the good thing about this is if you're looking at 58.05, this is a $58,000 contract. You don't have to risk $1 a barrel or $1,000. You can probably, risk about half of that or less, because if you get much above 58.60, which is 50 points from where we are, then you're probably wrong, and we're getting ready to go higher. So watch it very, very closely. The thing that I would be watching if I were looking at crude oil at this time, and I'm not, is I would be watching that level that we just hit and see how long it stays there. And if it goes popping through there by 15 or 20 points, you can pretty much gather that it's probably going to go higher. So it shouldn't get much any higher than 58.20 at the very most, I think, if it's any good at this level. So we'll watch that one very, very closely. Getting back to the gold market, though, another reason why we need to pay really close attention to this gold is because what's happening in the sister metal, which is the silver. Take a look at this silver chart, folks. This is a flat-out bearish chart. I mean, we're only making a 382 retracement, and we've only rallied 60 cents off the bottom. The last time we rallied well over $1 an ounce, and this time we've only rallied about 60 cents, and we're right at a 382 retracement that happens to be at the low we made way back on October the 6th. This is not a bullish chart in silver. This may change, but I am a little, and like I say, I'm a little skeptical here because the silver looks, looks pretty interesting. However, here's the key. If this is a long-term buy, and I really think that it is, and I'll reiterate that here in just a second because I'm getting ready for the break. I just want to show you this is the longer-term daily chart, and the weekly chart we'll show that again too. But if this is the really big one, this is going to be big. I mean, it is, and there is the crux is if it is the big one, and we're going to know pretty soon. So we'll take a little break here. 877-927-6648. We'll be right back.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, as a usual feature here, we're going to keep watching this Bitcoin as long as its trading is technically perfect as you can get. And as you can see, we were looking for the market to come down to right around that 16,000 level. It went to 15,850, and then we've rallied back to 17,800 just a little while ago. So this has held so far. What's interesting that this is an hourly chart, and this equals the sell-off that we had in the BC swing, where it went from basically 17,000 down to 12,500, and that those moves are exactly equal. And now it's in the process of either going up and making another new high, or this is going to be the rally back that leads to a larger sell. What's interesting about the Bitcoin, and the only reason we're watching it, and I don't recommend anybody trading it now. Well, you can trade it on the Merc if you like, but I wouldn't do it in some of these other places where you have to have wallets, because I don't understand all of that stuff. But, because there's so many people involved, it's worth just watching the chart patterns form, because they're the same patterns that we see pretty much in everything else, whether it's gold or crude oil or anything else. So you're seeing a great deal of that happening in Bitcoin each morning. So that's and night, of course. So those are things that are very, very interesting to pay close attention to. We have another market that we've been quite bearish on for quite some time here. Let's just wait. I think we have a okay, there we go. We got a caller from Philly. Johnny, are you there?
Merry Christmas, happy holidays to you, Larry.
Hey, Merry Christmas to you, my friend. I know you're asking about the old Bondolis, I think, correct?
Yes, indeed. I need your help here. You've got so much experience dealing with markets that do unexpected things. Here's the very specific question. First, It's clear to anybody bonds ran into trouble at 154 to 54 and a half. Okay, that much is known. I had shorted myself, full disclosure, I think it was Tuesday. No, I guess it was Monday. And I covered prematurely, and I've reshorted today. We've had big, what Basil Chapman would call trapdoor selling the past 3 days. And there's any number of fundamental reasons I can figure to point to this. I would like to ask you to help me get prepared for the quote-unquote unthinkable decline, the decline that is just getting going, that doesn't stop declining. So if you could help me with thinking through that and tactics, what you look at, that'd be much appreciated.
Well, John, I posted the chart of the bonds, and we've got we have 3 equal moves now. Once we went below that 151 level in the bonds, this is an area where they're very, very oversold. I would be looking for a bounce in here. However, the market is under a great deal of pressure, and even the shorter term rates that we focused on yesterday are going down a lot faster. What I would do, John, if you're out of your position, it's much better to be out of a market wishing you were in than in a market wishing you were out. And since you're waiting to get in, what I would be looking for is to watch to see if you get a 20 pip rally. We got one of those yesterday, right on the close. We got up to that 1127 level, 151.27 level, and then it turned down again. But I would be watching for a little bit of a rally here. Now, I have to put a caveat in here, is because we're so oversold now that and this is a huge market, as you know. This is one of the big ones. We could easily get a 1.5 handle or 1 handle rally in it without any trouble at all. But watch for the watching a 15-minute chart, watch for the little ABCD pattern if you get it in there. That would be a really low risk entry. And but as far as selling weakness, John, I can't help you, because I am without doubt the worst selling weakness, buying strength person probably on the planet. I just I just have a hard time doing it. I wait for the patterns to complete and then look at it. That's really what we're watching. So I hope that helps. I know I can't sell weakness, so there's no, but we're going lower, John. If you look at the weekly newsletter that I know you get, the price objective on this treasury bond, just the ABCD, because we hit that, that 382 up at that 156 level a few weeks ago. And that ABCD structure takes you to 141. That's 10 handles from where we are right now. And with the environment that's going on in the world, you could see that, quickly. I mean, you just don't know.
Yeah, that's the. Thanks for mentioning that. It's that idea that if this is a bear phase just getting going, 141's your ABCD target if we start breaking swing lows, and I guess we've got to contend with 151 and 147, but that would be quite a move. And I'd like to, let's put it this way, if that's what's unfolding as we speak, I want to be in it on the short side and not just twiddling my thumbs saying I wish I was in.
John, since I've got you on the line here, I've just posted the chart into the Tiger Den on the U.S. dollar index and how it relates to the Treasury notes. And if you get a chance to take a look at the divergence that has happened since, November 27th, this is, see, when the dollar goes down, interest rate, that means that your dollar is, buying less of things. But when the price of your interest rates go up, in other words, the yield on the note now is pretty close to 2.5%. That's 4 and 5 times what it is in some of these foreign countries that have really poor, ratings. And why is our dollar going down? What we're doing is you're getting a double whammy if you wanted to buy good rates, because you can buy the dollar cheaper and they're giving you a tremendous interest rate. This is an aberration. I don't understand it. And I don't know where it's coming from, but we're trading below 93 in the U.S. dollar index, right at the 78% level. Spot on. We get much below 92.70, there's going to be, something's big is happening, because as interest rates go up, the people want to buy those, they buy those higher interest rate things because they get much of a greater return. I mean, the return, I believe, in the UK is something like 0.8, and here we are 2.5%. That doesn't make any sense to me.
Yeah, I'll share this. I'm no expert on this field, but what I will say, just to that concept you've mentioned here, Larry, is any foreign investor has, when they're purchasing debt instruments looking for current income, they either have to take the currency risk or alternatively hedge it out by hedging out the currency risk. And I keep on hearing from time to time people quote cost of hedging currencies, whether you're a UK investor or a European investor or a Japanese investor, and the interest rate here is attractive, but the cost to hedge out your local currency risk can oftentimes negate that interest rate preference you get. So that's something that's going on, and frankly, I don't understand it all that well.
Me either. Hey, listen, thanks for calling in, my friend, and Merry Christmas to you, John.
Thanks so much, Larry.
Okay, we'll be back with Dale Pinkert of Forex Analytics.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
back, folks, and we've got an old friend on the line, Dale Pinkert of Forex Analytics. Are you there, Dale? Whoops, I hope I had Dale on the line. Maybe not.
I'm right here, Larry. Great
Hey, the wonders of technical stuff. This is great.
Yeah.
We have a question. Did you have any trouble with the fires over there in California?
They were away from where I live in Temecula, but my God, what a tragedy. I think they're still burning, threatening Santa Barbara. But you know what? As traders, Larry, we always feel the heat of a fire, don't we? And, you know, I wanted to ask you if you're doing your fib work on crypto, because...
Yes, I do it every day with Bitcoin. We have a couple of people here at Tiger TV that are very adept at it.
You know, because Forex, compared to crypto, has become so tame comparatively that ARP announced that they're endorsing senior citizens to be able to trade Forex now because crypto is so wild.
I could believe that. I mean, crypto is pretty wild, but you know, it trades, you know, relatively. What do you think of Bitcoin, Dale?
You know, I was never really able to wrap my head around it, Larry, and I just watched it in amazement. I've been a spectator, but you know, from having been around for a while, as you have and many others, it kind of reminds me of the dot-com phenomena, where the blockchain technology is not going away, but some of the early issues of anything that had .com after it went away, and we were left with the strength, the survivors, the survival of the fittest. And I think that something like that could happen in crypto. I don't know when. I don't know what the catalyst is. I suspect that what the catalyst may be is all the unregulated exchanges out there. You and I know that when we were trading futures, that we were always better off with a clearing member firm rather than a non-guaranteed FCM, because they were guaranteed by the exchange and your funds were segregated. And I just think it's a wild, wild west out there, and that people feel that their money might be secure, but there are already some examples of people not being able to get their funds out of a few of these exchanges. So it's a buyer beware type of thing. And if I was in crypto, if there's any way, maybe the wallet gives you more security, I wouldn't leave a lot of my net worth on an unregulated exchange.
No, I can agree with that. You made a good point here about the relationship between the .com, because in that .com we had, you know, stocks like WorldCom and Global Crossing and a whole bunch of those, you know, that never made it. Yet the ones that did hold up and make it have done pretty well. And we could be looking at the same type of thing where we have 1,200 cryptocurrencies out there. There might be 10 left at the end of the First World or the war, but then they could be pretty good. But we are watching.
That's what I'm waiting for.
TFNN, that's for sure.
So I'm using this time period to educate myself, so that if there is this type of washout and crisis in crypto, that I pick up the soldiers that are still standing after the battle.
That sounds pretty good. Let's take a look at this first chart that you sent us, and that's on the small cap Russell ETF IWM. You want to tell us what you're looking at here?
Okay, well, you know, Larry, it's the only one that hasn't really joined the parade, hasn't made new all-time highs. You know, the Russell tends to do better when the dollar is stronger. This is going to be, you know, I'm a big believer in relative strength, and so it's going to be my favorite short candidate when I believe that the other indices and bourses have topped. I'm looking for a pretty good correction to happen this year. I think at least 20, maybe 30%, looking at maybe the S&P's peaking between 27.20, 27.40, and then I think there's a possibility that I'm not sure what the catalyst is going to be. Could be the bond market. You know, we've had disintermediation happening between bonds and equities for a long time. I mean, we haven't seen the recent low in the 10-year yield was 2, and, you know, we haven't seen that 1.35 for a few years. So they've been diverging for a while. And in 87, they diverged, and there was disintermediation for about 6 months. So bonds look like they're on their way to new lows, new highs in yield. So I'm thinking that once that completes, that we could get a correction in the stock market that could take the S&Ps maybe back to their breakout at 2100. So I do like the fact that the Russell is underperforming. I do believe that we could still get a new high in the Russell, but if you notice the divergence on the Russell and the RSI levels compared to the Dow, S&P, and Russell, that the momentum in the Russell is lagging seriously on all different time frames. So that's going to be my preferred short when I get a signal in S&Ps.
You know, what's interesting, Dale, is that Russell 2000 is the second largest of the 4 indices that we trade on those indices. You know, it's the S&P is first,
Right.
and then the Russell, then the NASDAQ, and then, of course, the Dow, which is the thinnest of all of them. So the Russell is right up there, and it's I think it's $5 a tick in the Russell, which is similar to the Dow Jones. So it's certainly acceptable for risk on most people. But a lot of people just don't trade the Russell yet. It's right up there.
Well, you know, I'll be looking for me because, you know, Larry, in this environment, I really believe that to try and top pick this and be right, that the best way to go is with bearish ETFs. So I'm looking at TZA for my personal account when I go with it, because, you know, when you're looking for this type of magnitude move, my tendency is usually to be a little early. I'm trying to sit on my hands to do it, but you know, I think even at these levels, when you look back in about 3 to 4 months, I think that the sell-off will happen into the spring. So I'm going to go with bearish ETFs instead of being heavily leveraged in futures and being, you know, right the market, wrong the trade, which is what a lot of people do. So I recommend, I'm a big believer in reduced leverage, not increased leverage. So, you know, if you can't be wrong for a day, and in this case for a week, how could you be right for a few months?
This is true. You know, we've both been around for a very long time, and frankly, we haven't seen anything like this since the dot-com bubble. As a matter of fact, we were chatting here on TFNN just the other day that this last move that we've had this past 2 years, since the 16th, well, it was actually December of 2015 when we bottomed, is twice as big as the dot-com bubble move. Isn't that amazing?
It is amazing, and you know, look, I didn't participate in this big rally on the upside, so you know, I haven't really been damaged by trying to be short this thing, although I've attempted. I think most people that have been around for a few decades have attempted top picking this thing, because you either have to be naive or greedy, just like Bitcoin. I mean, if you bought Bitcoin at $1,000, would you still be in it at 18? Or would you have been out of it at 5,000?
Hey, Dale, stay with us. We got to pay a few bills. Dale Pinkert of Forex Analytics. We'll be right back. 877-927-6648.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Dale Pinkert of Forex Analytics. Dale, we're going to talk here a little about the U.S. dollar. We posted your chart in here. Dale, I've been trading this stuff for a long time, and I have never remembered where we've had a situation where the dollar is dropping and interest rates are going higher. I mean, as interest rates go higher, money should be pulling in to get some of that 2.5% 2-year note stuff. Wouldn't you think? I mean, what you see what's going on here? What do you think?
So much for correlations that work until they stop. And you know, that happened between oil and USD CAD this year. You know, currencies are our bailiwick here at Forex Analytics, and that may continue, Larry. As you look at this chart right here, you know, we've been down all year for 8 months. This bounce that we've had here hasn't even achieved a 38% retracement. If you look at the baseline, the lower line on the weekly, that's where I think it will go. And what's even more amazing about the dollar not being able to get any kind of lift is that you have record net long positions in the euro, which, you know, most people would take as a contrarian indicator to short the euro. And to me, it looks like we're going to have a washout to take out the low that we posted in the summer at that 91.5 level, head down towards 88, and then maybe yields are going to start to matter again. But to me, it looks like for the year, a very negative year in the dollar. So I would expect the year to possibly finish off negative, even start off negative into early 2018. So even if there is a bounce, and your first inkling that the dollar's going to rally would be closes back over 94.20, and then perhaps we could get a move back to 96 or 97. That's what a lot of counter-trend traders were looking for. But the longer this goes on, the more negative I become, thinking that we're going to have one more washout. It could be a third drive there down at the 61.8. And when you look at it long term, that all of this action here in the last few years has really just been consolidating the big bull move that we had, and I think that there's a chance once all the dollar bulls are out, and they will be out under 91 and 90, and perhaps we trade down to that 88.5 level, that it's going to be a great dollar buying opportunity. You don't hear anyone talking about euro parity anymore, so I'm thinking euro has 121 or so in it before a peak, maybe 123, but a better dollar buying opportunity happening when people panic back under 91 is the way it looks to me.
That's a very good analysis, because if we get much above this 119 in the euro, we're trading at 118.51, we could easily get up there, and that would set up that scenario that you're looking for. Just since we've been on, Dale, the Dow's dropped 100 points just since we were talking in the first segment. So we're starting to see volatility come into the stock market.
Yeah, it's very possible that, I know you're also familiar with Gann. Aren't we at the winter solstice here, Larry? Is it today or tomorrow?
Yes, it's tomorrow. It's tomorrow. Okay. Good. You get an A+ on your astrology this month.
Yeah,
That's
well,
terrific.
I pay attention to the change of seasons. I even come up with candidates that may reverse into it, and S&Ps were one of them. I don't think this is going to be the final high, but it could build the case for a nice little sell-off, maybe back towards 26.5 or so, and then one more push up into early next year, because then you'll start to have RSI readings not at 82, not at 85, but 70 or lower. My best short setups are divergences under 70, not above 70. So this would actually set the stage for when we get one more rally to new highs, that you'll probably have weaker breath and weaker momentum.
And you're seeing that divergence in the RSI and the IWM in the chart that we posted this morning. You're starting to see it. What is it running right now? I didn't look at the exact figure. I just saw the slope of the line.
Yeah, well, it's a little above 70 at the highs, but you compare it to the Dow and the S&Ps, we got into the mid-80s. So, markets rarely peak when momentum's over 80, and they rarely bottom when momentum's under 30 in the RSI. In fact, I renamed the RSI to the real simple implicator by what it implies, not just being overbought or oversold. So,
I have a question for one of our listeners, Dale. Do you use any other oscillators, like you use RSI? Do you use MACD or
I don't.
Stochastics or anything like that? Just basically the RSI?
Yeah, you can't teach an old dog new tricks, and I teach people and mentor people that when you find something that works for you, and Jack Schwager, who I've interviewed, said that we all need to find a trading style that suits our personality. Once you find it, you stay with it. I think the big mistake people make is they're always out there, Larry, looking for the holy grail that doesn't exist. So find something that works for you and stick with it. And over time, it'll become automatic that you'll be able to see things.
Okay, now we have a second here. We were chatting in the room this morning about the crude oil, because we're coming into some pretty interesting spots here in crude. You want to tell us what you're looking at, especially since we were talking about that RSI? It's certainly been diverging here, hasn't it?
Yeah, and wave guys would say we're in a wave 4 triangle here, which implies thrust, which could be terminal. And if traders go to their weekly chart, the falling wedge was anchored at 62 over a year ago, and the return line that we had to throw under when we took out 32 and went to 25, once it got back inside the wedge, I've been talking 62 for quite some time. That's actually a fib target up there at 62. So I think that we could get one more thrust. Maybe it ties in with some more dollar weakness that drives crude up there, and then sets up downdrafts in a lot of different markets, and maybe a low in bonds sometime in the next several weeks.
Okay, Dale, how would the folks, reach you if they'd like to get a copy of what you're doing and contact you? What's the best way to reach Dale Pinkert?
Well, you could follow me on Twitter at Forex Stop Hunter. And as you can see on the charts, www.forexanalytics.com, Larry, we have a free trading room where the whole team gets together and collaborates with the community. And like you, I bring in some good guests. It's a shame that you and I have conflicts on time. I'd love to have you. But we have a free room for people to come to and check us out and know what we're thinking. So if they just go to forexanalytics.com, they could join us. The room opens at 9 a.m. Eastern, 8 a.m. Eastern, and goes to 9:30 a.m. Eastern.
Mm-hmm. Okay, Dale, listen, I want to thank you for joining us. We're going to have you on next year, so I want you to have a happy holidays, a Merry Christmas, and a Happy New Year, and stay safe and stay away from those fires.
All right, Larry, thank you so much for having me back. May this be a great 2018 to you in all ways, not just financially.
Thank you very much, Dale. We really appreciate it.
All right, buddy. Bye-bye.
You bet. It was Dale Pinkett of Forex Analytics. I've known him for many, many years. Okay, we're going to have a break coming up here pretty soon, and then we want to get back and talk a little bit more about the bond market and also the gold market, because these markets are ripe, and whatever that means, but we'll watch it very, very closely. 877-927-6648.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we'll be here tomorrow and Friday, but Monday will be a holiday. And anybody that can guess what you open the day after Christmas wins a prize. You get 30 seconds to answer, but keep an eye on the gold. I believe we're possibly getting ready to see a correction down into that 1250 level. I don't know if that's going to happen or not. I'm holding the position that we bought at 1240, and for the best, whether it's going to work or not, we're going to be able to see in the next few days. We want to watch for either 382 or a 61% retracement in the gold. The bonds are, heading lower. The question is, do they rally from here? We have this really strong move. I posted a chart of the Elliott wave stuff that we get from Mr. Prechter. You notice that we're in some type of a wave 5 that he's looking at somewhere above 25,000 in the Dow Jones, and that is one short throw away. So I don't think it's hit 25,000 yet in the Dow. It's gotten very close, but not yet. So we could get there, very easily, especially with the tax thing going on, and who would know whether it's going to if it's going to move or not. We'll have to wait and see if that is if that's going to happen. So keep in mind that we're in interesting times, as the old Chinese curse says. So, but three markets to really pay attention to, folks, are the crude oil market, that 58 level. The bonds down here at this going below 151, they're very oversold. They're due to bounce. And the other thing is to watch that gold, because silver is acting so poorly. It's barely making a 382 retracement in perfect ABCD format, and that is not very good. So I think we're going to get some type of a correction here, and we want to be looking to buy that correction in the gold market, and it trades very nice technically. And with the holiday coming up, we're going to be slowing down with volume and everything the next 2 days, and coming in here on the 26th of December, we'll probably start rocking and rolling again. 877-927-6648.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.